Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to look at 5 different companies that are still undervalued. Right now the market seems very expensive, but I do have some companies that are still undervalued in the portfolio, and I found some companies that I do not own that are still undervalued. So I'm going to share that with you today. All of these companies do pay dividends. At the time of recording, every single one of these companies is undervalued. Before we do that, if you haven't joined us on the Patreon account, please do so. It does really help the channel. And I'm going to talk about a couple of more things regarding earnings reports. So automatic data processing actually reported yesterday. They beat both top line, bottom line, and the guidance was actually quite good. The stock was up for a bit. Today was S&P and Global. They reported, but they just missed out on EPS. But they beat the revenue, and the guidance was actually quite nice. But for that reason, the company actually was down. I think it was down about 6-7% when I checked last time. I think there you go, 7.5%, almost a 7.64% down this morning. This up basically by the time the market closed this afternoon. So, and then the final company that I want to talk about is Union Pacific. This company was actually missed the revenue, both revenue and EPS, and you would expect the company to go down a lot, but it didn't because of this situation. Okay, they have appointed a new CEO, and for that reason the stock was up yesterday. I think it was about 9% or 8% at some point. So yeah, there are still a couple of companies reporting tomorrow. So you've got, so tomorrow as of Friday, basically Exxon is reporting, Procter & Gamble, Chevron, but the only one that I own is P&G, so I'm waiting, and AstraZeneca as well. So I'm waiting to see what happens to those two companies tomorrow. So far it's going okay. I mean, a lot of the companies that I reported that I own in the portfolio, companies like 3M did well, Visa was good, Microsoft wasn't so great, but obviously they were expecting so much of that company. But obviously they are spending a lot of money, and that's probably one of the reasons it was down. They're spending a lot of money kind of putting in this AI basically situation into their products. Basically every single product they own, they're going to try to add some sort of AI, and that's obviously going to be a lot costly, obviously. So the cost is going to go up, but we will see what happens. So let's go over these 5 companies that I want to talk about, because I don't want to make the video any longer. Again, when at the time of recording, every single one of these companies was undervalued, so check before you actually invest in these companies. As usual, obviously, like I've always said to you guys, I'm not financial advice. I'm giving you some ideas of what companies you can look at right now. Okay, that doesn't mean obviously you just buy them, but always do your own research. Okay, it's very, very important. Right, so let's have a look at the first company. That is TMO, Thermo Fisher Scientific. This company has basically $217 billion market cap. It has wide economic mode, $560 per share right now. It has a very small dividend, okay, with 0.25, but the payout is also very small. But the latest increase was about 17%, the 5-year growth rate of 15%, and dividend streak of 5 years. So they have increased that dividend for 5 years, and they pay you $1.40 for every share of that company that you own. According to Simply Safe dividend, 72% is basically safe, about 72%. Profit margin of 13%. Return on equity about 14%. Free cash flow right now is $5.62 billion. Total return in the last 10 years, we're looking at about 20%, which is really good. Growth estimates was 12%. Growth estimates for next year is about 12%. Then the next following 5 years is about 9%. It's discounted right now about, give or take, about 6%. It's $600 per share is basically where they expect the price to be basically by the end of the year, basically where the intrinsic value is supposed to be, basically. Okay, the next one is a competitor to Thermo Fisher. So basically they are in the same kind of industry, these two companies. $189 billion market cap. It has a narrow economic mode. It has a price of $255 per share right now, 0.42. Again, the dividends, both of them are very small, but the payout is basically ratio is very low as well. Which means basically this tells us the companies have enough money to, basically enough room to improve that dividends if they want to. So out of their net income, they're spending about 6%, 10% of their net income to pay us as basic dividends. Okay, so the latest increase for this one was 8%, and the 5-year growth rate is about 12%. They have increased it also for the last 5 years. They pay you $1.08 for every share of that company that you own. Safety is 73%, profit margin 22%, return on equity about 14%, free cash flow $7.32 billion, total return in the last 10 years we're looking at about 15%. Growth estimate is about 10% for next year and then 2% after that. I'm not sure why there's a huge decline, but for whatever reason, okay, there basically it's about 2%, 4% discounted right now. $263 per share is where the price should be. It has gone up quite a bit in the last couple of days and then come back down again, so you have to check again. I think right now it's trading at, sorry about that, it's trading about $255 per share, and 265 is where it should be, so it's about right. So Nike is right now is the next company that is undervalued at the moment according to Morningstar. Again, I'm not doing a discounted cash flow models on these companies. I'm using what basically Morningstar has given us, their information, and I've always said to you guys, I do feel like they're quite reliable, but obviously you're gonna have to do your own research or do your own discounted cash flow models. Okay, so I'm using basically the information that I've gathered from different websites and mainly Morningstar. Again, some of you have asked me recently what websites I use and so on. I use Seeking Alpha, as you've seen already. I use obviously my account, which is Trading 212 account. If you haven't got an account, you live in the UK, you use the link in the description. Okay, you get for like a free share and so on. I also use Yahoo Finance. I use Simply Save Dividend. I use Simply Wall Street. I've used loads of different websites to gather some of this information. Okay, I also use Vinfiz as well to look at sometimes the stocks. I use their stock screen as well sometimes. Okay, so Nike is 167 billion market cap right now. It has a wide economic mode. Price is $107 per share. I think when I started buying this company, I think it was 110, so I'm down maybe a little bit. I'll check again. Dividend yield of 1.26, payout ratio only 41%. Latest increase is 11%. 5-year growth rate 11%. They have increased this dividend for 21 years. 4 more years and this company will become what's called a dividend aristocrat, and that's a company that have increased their dividend for 25 years, and then 50 years as dividend kings. Okay, apparently there's a dividend what do they call them? Yeah, companies that raised more than 100 years. Yeah, there are some companies like Procter & Gamble that have been paying dividends for so long. They have a different name. Safety is 99%. Profit margin of almost 10%. Return on equity 34%. Free cash flow $4.87 billion. Total return 14%. Growth estimate for the next year is about 18%, and then 15% after that. This is really huge. This is double digits. This is really good for a Nike, for example. Okay, the company that's been around for a while. Very innovative. They actually do change their products quite a bit. But yeah, so 21% discount right now. $138 per share is where the price should be. So it's an interesting company. I do own it in my portfolio. So just to kind of be transparent, that's so far out of the companies that we've spoken about, this is the only one that I own. I also have another, can't remember how much per shares, but this another, I think about £2,000 of this company as well in the family portfolio. But as you can see here, I own 11.5 shares right now, and like I said, I'm actually down a little bit. And as you can see, my price is 110, so $110 per share is where my average price is right now for this company. The next company we're looking at is Unilever. Is another company that I own in the portfolio. Currently, basically has a market cap of $132 billion. And it has a wide economic mode. $53 per share is where it is. I'm using the US version, so it doesn't make any really huge difference. Dividend yield of 4.22%. And payout ratio 67%, so it's slightly higher. Latest increase wasn't almost non-existent. They don't really increase as often, but like I said in one of the last videos, I use Dividend Max for the UK companies. They do increase it, but this Simply Save Dividend does not actually have that information. So if you want it, go to Dividend Max and type the ticker symbol and you will see. In fact, I'll show you very quickly. And there you have it. So this is Dividend Max. So you can see they have been increasing. So sometimes, some years they don't actually increase it, they just keep it. But you can see they have increased it 2021 to 2022, 2022 to 23 is not available yet. So yeah, so sometimes I'm using the information that I've got from Simply Save Dividend in here, but you can see they are increasing that dividend. The 5-year growth rate is about 3%. and dividend streaks of 28 years in a row. It has a profit margin of 12.7% and return on equity of almost to 40%. They have $5.57 billion of free cash flow here, and they have a total return in the last 10 years about 5%. Growth estimate for next year, I couldn't find it, but growth estimate for the next 5 years is about 7%. And this information, normally I get it from Yahoo Finance. So if you go to Yahoo Finance, and basically you can find that information. Morningstar is basically saying it's 8% discount right now. Their target is about $57 per share. Right now it's about $53 per share. The final company I'm going to talk about today is Robot Technologies, and that company is trading right now. It has a market cap of $53 billion. It has a wide economic mode. This company basically develops a lot of different types of software. It used to be kind of industrial kind of company, but now it's more software based company. Price $491 billion. $491 dollars per share right now. Dividend yield of 0.56, 17% growth in terms of payout ratio. Latest increase was 10%, 5-year growth rate of 12%, 30 years of increase in that dividend. So they are a dividend aristocrat. Annual payout is $2.73, 98% safety, profit margin of 81%, return on equity 30%. Free cash flow right now, this company has 645 million. Doesn't have $1 billion, but it's basically 50. It has 53. I would expect at least a company that has a market cap of about 53 to have at least $1 billion or two free cash flow to make sure that dividend is completely covered. But as you can see here, it does cover. 17% is actually quite low. Total return in the last 10 years, we're looking about almost 15%. Next year, they're expecting the earnings to grow about basically 8%. Then 10% after that, 8% discounted right now. $540 per share is where the price should be according to Morningstar. So there you have it. 5 different companies, all Sharia compliant companies. Every single one of these companies, well, the 2 that I own are these 2. Just to be transparent, I'm going to show you my Unilever shares on my trading 212 account. As you can see here, I do have 100 shares of this company. My price is about £41. That's in pounds. I'm up about 1.71%. Okay, well, just let's call it about 2%. It goes up and down, but I haven't added to it for a while. But it looks like if it comes back, like I said in the last video where I talked about this company, if it comes back below say 37s, 38s or whatever pounds per share, then possibly I will be adding to this company again, because I really genuinely do like the company. And right now overall portfolio, it is about the 6 basically highest. I think about 5% of it basically is quite a lot, but obviously I wouldn't mind adding a bit more to it. There you go. That's basically the 5 companies that I wanted to share with you guys today. Just post the video if you want to just have a quick look at this. Like I said, at the time of recording, every single one of these companies is undervalued. When you look at the market, you think it's basically everything is right now green, especially when you look at the 3 months, for example, and you might not be able to find any values. But there are some companies still in here that are still basically trading under their intrinsic values. So just I'll keep finding those. InshaAllah, I will be sharing it with you guys. If you like this type of content, you love the transparency, please like the video, subscribe to the channel, let me know if you have any questions, and definitely join us on the Discord and obviously the Patreon account, because this really helps the channel overall. Have a wonderful day. Assalamu Alaikum.